Bitcoin market update for November. Obviously, if you've been on CoinGecko, you would know that in the last 7 days, ETH's down 13.8% and Bitcoin's now down to 107K. A lot of major altcoins being down 20 to 30%. It truly feels like we're in a bear market. So here's what I expect to happen this month. First and foremost, I do not believe we are in a bear market. Let me know in the comments if you agree or not. However, while I don't believe Bitcoin's in a crisis, I do believe retail is. But institutions are doing just fine in this bull run. Structural bull case is still alive, backed by institutional inflows in ETFs, long-term adoption, and supply dynamics that remain historically tight. The reason why retail feels like we're in a bear market is simply because of institutions. Institutions are dirty. And it's so interesting that 3 years ago, people were advocating against Larry Fink. They were against JP Morgan. They were against the institution. But now the crypto industry welcomes institutions with open arms. They want more ETFs. They want more institutional money. But once you let the institutions in, they start taking advantage of retail. So right now, as the market is grinding and altcoins are bleeding and macro conditions aren't helping, liquidity is getting tighter. Real yields are still higher and the dollar remains strong. Whatever liquidity is in the crypto market is either A, being absorbed by the institutions, or B, retail is being forced to capitulate out because they can't afford to pay off their debts from all the high interest rates. Or they're getting liquidated in massive deleveraging events like we saw when Donald Trump tweeted just a few weekends ago. Is that market manipulation? Maybe. In my opinion, it is just institutions being better traders than retail, and that's how it's always going to be. It's the harsh reality. In my opinion, what's happening right now isn't a collapse or a bear market. It's simply just digestion. It's accumulation. Bitcoin surged massively over the past 18 months. And for institutions, not retail, that's a problem. Retail keeps thinking as if this is some magical, everybody get rich type of cycle. No, the institutions are here. And institutions, when they make 100, 200, 300, 500% gain on an asset, they're going to rotate those profits into safe haven assets like gold. Or even rotate it into other things like Nvidia here, which is having insane earnings. That's the problem, because Nvidia isn't just running off of hype and liquidity. Sure, that was part of it. Nvidia is driven by earnings and AI demand. And while Bitcoin is driven by liquidity and sentiments, money rotates out of Bitcoin and what is already a low liquidity environment, it's going to cause huge volatile swings as there's a very limited supply on exchanges, creating this huge deleveraging event where you get Bitcoin dominance kind of ticking higher as altcoins, every single time Bitcoin jumps to 110, 120, 100, let's say it goes to 130K, altcoins are going to jump by 2, 3, sure, 4x, maybe max, and then it's just going to rotate all back into Bitcoin dominance. I expect one of two things happen. A, either Bitcoin holds at $108,000 to $110,000, and then you get the macro ease everybody's been waiting on, rate cuts, weaker US dollar, renewed ETF inflows, and we see Bitcoin push back to 120 to 130K. Newsflash, your altcoins may not actually perform the way you think they're going to in what would be an alt season. Scenario B plays out where the support actually breaks here at the 108 level and we start to go back down towards these major fill gaps where if that breaks, you see a below $100,000 price point on Bitcoin where I think the mainstream media would go nuts. That'd be the ultimate fear mongering. Maybe we dip down to 92K and fill the bottom of this futures gap. This would be, in my opinion, the final shakeout or the max pain or the broader deleveraging event. The bottom line right now is simply be patient, stay focused, and don't mistake consolidation for clout. This happens every time we bottom in the market, whether it was at 15K, 30K, 50K, 60K, 70K, 80K, etc. Every single time we get to this point where people are like, oh, the market's going to collapse, just ends up being the best time to accumulate in DCA. Summary, I don't believe this is the end of the bull cycle. It's a rotation of retail liquidity into institutional products like ETFs, where less supply and more demand just creates more volatility and more deleveraging. More institutions and governments that come into crypto, the harder it gets for retail. Also, for you guys wondering where I've been the last week, last month I hosted the first ever World Trading Esports Championship, and I've been preparing for the full launch of our actual organization, planning our next major event in Lisbon, Portugal in just 10 days. This was a private esports event that we held on a yacht in Dubai, but we are making trading in esports. We're doing both physical and virtual events where anybody can join as a competitor, and of course, you guys can attend these. 16 traders, 1,000 attendees, massive prizes, and a botanical garden with some of the biggest partners in crypto. The last 4 weeks have traveled to 7 different countries around the globe to meet with the biggest events and the biggest companies in crypto itself to host you guys the biggest esports events the world has ever seen in 2026. We're quite literally turning trading into one of the biggest esports ever. We're a brand new startup and we're getting featured everywhere. If you want to see that live, make sure you give us a follow, comment down below if you want to be a trader, and we'll see you in the next video.